sent a text saying she's going to be listening to me, and Diane and Jason who are listening to me. And Jason, no, I'm not always this chipper on a Saturday morning at 9 a.m., but since I started doing this program, I learned to be. Thank you very much for listening. We are live stream on www.wcab59.com. Also, I'd like to welcome our Northland Cable subscribers at Northland Cable Channel 5. And we are here 5:90 a.m. this morning. Where do I begin? It's been a very, very busy week. The IRS is continuing to release refunds at a pretty good clip. Last week, for those of you that listened, remember I talked about the Treasury Department was talking about the debt ceiling, that the debt ceiling might stop or at least curtail or hamper refunds because this time of the year, with the high volume of refunds that go out the first 4 to 6 weeks of the tax season, is the bulk of the people that get a refund due to credits and overpayments. They know they're getting a refund, file right away. They file early, they file quickly, they file electronically. So the system is streamlined, so it spikes that debt ceiling. And the Treasury Department, the White House actually is, I think, who released the initial report, was playing political football with the story, saying that we need this debt ceiling raised so that taxpayers could get their money. Well, and I said, it's your money. There's no reason for them to even be discussing whether they're going to refund you your money or not. It's your money. And it's that kind of posturing in Washington that always bothers me. Well, the debt ceiling was raised, and it didn't even slow down refunds. And I will continue to follow that story because it's interesting to see how that's all going to play out, especially with these coming elections. Congress has created all these tax credits, and now it's time to make good on them. And when they create these things, they didn't think some of it through, and they didn't allocate the proper funding. And then they put it back on the taxpayer like somehow it's our fault that we're actually making these claims for these tax credits. So that happened this week. But with all of our people, we're seeing the refunds coming back at a good pace. Some of the things that I noticed with other people I've spoken with, as well as with my clients, some of the holdups that were happening in being able to file your return. I noticed this year several errors in the W-2 and this is the difference between having a professional do your taxes and people that do taxes themselves, or people that have somebody that's what we consider a seasonal preparer. And that's another story I'm going to get into in just a few minutes. But when I'm doing your tax return, I am looking at EIN numbers, I'm looking at Social Security numbers, and I'm making sure that they're correct. So if you've had any issues with yours, call me here with any questions you might have. You can call me on my cell phone, 828-289-9300. You can call the station at, what's that station number? Call me here at WCAB at 286-3356. That's here at the station. Christy's manning the phone. You can ask her your question, and she will answer it and bring it to me here. And actually, several phone calls have already come in with some questions. You can also email me. Go to my website, gilberttalkstaxes.com. Click the contact page and type in your question and send it to me, and I will get your question here. We have my laptop here, and I'll try to answer your questions on the air. But one of the things that I notice when I'm doing the tax returns is I look to make sure the tax preparer, the person that did your W-2 and your 1099 put in all the correct information. Because if it's not, and I had 2 of them with wrong Social Security numbers this year, and the part that was kind of scary about that is that these are people that have, thank you, these are people that have been working for this company for a while. And what happened with the one is they changed payroll services. And the payroll service is the ones that made the mistake. So as I'm inputting these things, I'm looking at these, and these are numbers that normally, if you're just going from one year to the next, especially if you go to the same tax preparer every year, They may not look at that. And what happens is, let me explain, a lot of people don't understand a W-2 and a 1099, what happens. When an employer prepares a W-2 to give to you, an employee, it has all your data on there, how much you made, and every one of those boxes means something. They're not just there for nothing. Every one of them reports a specific dollar amount or a specific activity that has an impact on your financial life. So that W-2 that comes to you, another form called a W-3 goes to Social Security. It does not go to the IRS. It goes to Social Security. Social Security, in their system, they put all that into their system so that you get credit for your Medicaid and your Social Security for your retirement benefits. Then they send their data to the computers at the IRS. So you could file a tax return, apply for a refund, apply for credits, and get them. And because of that lag time, W-3s don't even have to be reported to Social Security till March 31st, especially if they're being filed electronically. Now, they're being filed manually, the old way, handwritten forms. Those have to be in by the end of February 28th. But if they're doing it electronically, and everybody does them electronically nowadays, and soon there will be a mandate that you have to do them electronically, but right now that's not the case. So, but electronically they have till March 31st. So there could actually be a 4-month lag time till the IRS gets the corrected information. Then the IRS will send you a letter saying, oh, by the way, there's this mistake and you owe us $3,000 or $2,000 or $4,000 or whatever the case may be. Or they'll say, we've got this conflict, this didn't match up, and it's just a lot of extra work that you don't need. And a lot of things that can be avoided if just when you're doing your tax return, when the professional you hire to do your tax return can take a few minutes and look at, make sure the employer EIN is correct. That's the employee identification number. Make sure that the W-2 Social Security and the 1099 Social Security number is correct. The mailing address, that's not that big a deal because people do move and people do change, but make sure they have the right mailing address. And a lot of people don't pay attention to that because they're having direct deposit of their refund, so they really don't care what address they report. But what's wrong with that is you may get a time-sensitive letter from the IRS. And this is, let me stop right here and talk about fraud and email fraud. The IRS, the Department of the Treasury, will never email you. They only do it through the mail. And if it's very, very important, they will send you certified mail. So if you get an email from the IRS, it is fraud and a scam, and you should report it to, they have a website for that, for reporting that. I get phone calls. I get at least 5 every year from somebody. I got a letter from the IRS that I owe money. I got an email from the IRS. I got this, I got that. And then when they bring it to me, it's almost always fraud. What they want is your date of birth and your Social Security number. The IRS does not need your date of birth and your Social Security number. They already have it. As a matter of fact, they know more about you than you'd like them to know. So that's one of the things we've been finding a lot this year. There's been some mistakes, and the other mistake I had was an employee that got a 1099 and a W-2 from the same employer. She thought she could disregard the 1099, didn't know what it was, and if she hadn't just mentioned it in passing as I was finishing her tax return, she said, oh, by the way, I got this thing, what do I do with it? And I said, what thing? She said, I got this letter, it's a 10-something, a 10-9-something. I said, a 1099? She said, yeah, but it's from the same people I work for, so I just kind of left it at home. I said, you need to get that to me. And when she brought it to me, what had happened is she was working, she got hired through an agency, and a lot of people that work, especially in the medical profession, they'll get what they call onboarded. They'll get hired through an agency as a temp, and then there might be a 90-day contract or whatever the deal that they set up. And that contract period, you're actually an independent contractor. What you get as an independent contractor is a 1099 miscellaneous, and then the employer decided, okay, we'll take your onboard contract and we'll make you an employee of our whatever, and then you become a W-2 employee. So be aware that if you have something like that going on, you may be getting a 1099 as well as a W-2. Your employer should tell you this. In this case, the employer didn't know anything. The employer only was aware of after they hired that person what happened. They didn't know anything about the temporary service and what their agreement was with the employee. But you as an employee or you as an independent contractor need to know what's going to happen, what you're going to get at the end of the year if they're paying you. Now, how they pay you doesn't matter. I've had people show up with a 1099 and say, well, they gave me this 1099. I didn't know I was getting this. I said, well, did you work for them? Yes, I worked for them, but they paid me cash. Well, how they paid you doesn't matter. I don't care if they paid you with South African Cougarans. You got paid, and you made money, and now they're giving you a 1099, and that is reportable to the government because the IRS will get a copy of that form. So that's some of the things I saw this week. We've got some questions here. Let me get to them. Section 179 depreciation. That is a wonderful topic. We purchased equipment in 2013 for the business, $60,000. Is it correct that equipment can be fully depreciated in 2013 using Section 129? Yes. If our net income yes, you can. Let me read the rest of it. $65,000 depreciation of the equipment. Okay, before I get to that part, 179 depreciation. Yes, any equipment that you bought. The old rule was the equipment had to be new. There was a rule change there, and they said that equipment could be used as long as it was new to you. What they were trying to avoid there was a situation where two companies are owned by the same person and they simply swap the asset from company A to company B and call it a new purchase and write it off. No, you can't do that. That's against the rules. But you can go out and buy used equipment as long as it's new to you. You can depreciate 100% of that purchase. The cap on that was $500,000 per entity for the year. That this was in relation. The comment I made last week that I had some clients at the car dealership buying cars December 31st. Yes, I did. That's what they were going to do. They were going to Section 179 those purchases. Those were cars that were 100% business use. They were bought. Actually, these cars were being bought under the company name. The company was an LLC, so there was no question there that this was 100% business use vehicles, and they were using them on. They bought them on the 31st. They got 100% write-off on it, even though you may have a where you're paying it off over several years. In their case, I think they got a 48-month note on both those vehicles, but that's okay. They can still depreciate them this year. And it's kind of a risky strategy. You really need to look going forward. Is it better to depreciate those vehicles over a 4-year life, a 6-year life, a 7-year life, depending on what schedule they fall in? You're trying to project forward. In the case of these businesses, both these businesses, it made sense to take the 179 now because they had what we feel is going to be exceptional gains in 2013 that they're not going to have in 2014 because of other things they had that produced revenues that we're not going to expect going forward. So it's really more of a strategy than just saying let's run out and spend a bunch of money to get a tax write-off, because there is a lot of wisdom and there's a purpose in stretching out these purchases and getting the full depreciation life cycle. If the net income is before then depreciation, no, you cannot take 179 that asset cannot produce net operating loss. So it would cap out at zero. So you can only take the amount up to the zero. And can you carry it over? Well, I believe the way the rules read, and I'll have to research that, and Christy, flag that email for me. I'd like to respond to that. There's a depreciation guide I'm going to email you. Otherwise, you can go to the IRS website at irs.gov, look up depreciation, and there's a publication that really gives some great examples and some great formulas and some templates you can follow. So I recommend that. And I did I said the word tax credit for purchases. That was actually the Section 179 I was talking about. Healthcare reform. Touch on this. I talked about healthcare reform last week, and I probably said more than I wanted to, but I don't know where to go with healthcare reform. It is such a convoluted mess. The rules right now, I mean, nothing's changed since what I shared last week. You can go to my website, gilberttalkstaxes.com, and I actually have the audio from every program I've done, and you can listen to what I had to say last week. But going forward, there have been no changes. It's just getting more and more confusing. I really don't know where to go with that, but let me email you some forms on that too. Somebody made a note that they've gone to my website and they appreciate it. And there's also the transcript. I'm having the program typed up and transcripted, and it's on the website also. Now I want to talk about something interesting that happened this week, and it's something I've got mixed feelings about. I'm going to try to be as as in the middle about this as possible, because I do lean in one direction, but many of you may not be aware of the IRS has been trying to regulate the tax return preparer profession for several years now. There are three professionals that work on taxes. You've got attorneys, and typically attorneys that work on taxation call themselves tax attorneys, and they'll tell you, I'm a tax attorney. They don't want to hear about divorces or child custody or traffic tickets or DUIs. They are tax attorneys. A lot of them, I have a great respect for them. They're very, very knowledgeable in their area. They spend more time in tax court than I'd like to spend, and they're great professionals. I always enjoy talking to them. The other one are CPAs, and the other ones are enrolled agents, which is what I am. I'm an enrolled agent. We're enrolled by Congress. We're enrolled by the IRS, but by law of Congress. And it was a law that was passed after the Civil War to help Southern farmers make claims for retribution when the federal government was going to pay back Southern farmers for lands and livestock and houses, homes that were destroyed because of the Civil War. The law has been called the Dead Horse Act because Southern farmers kept coming up to Washington asking for money for their dead horses. And Congress was giving them the money. And at the end of about 6 months of this, Congress said, we've paid for more dead horses than there could possibly have ever have been in the South. And the farmers that did need the help and did need the money weren't getting representation, and the ones that were aware that they could go up to Washington and get a check were abusing it. So Congress created an enrolled agent, which we're still around today. There's 43,000 of us. We're specialists that only do tax work. We represent taxpayers in appeals, audits. We're authorized to represent taxpayers before the IRS in all matters. So other than that, there has been no legislation and no monitoring of the tax return preparer profession until recently. With the advent of the computer, it became possible for large, wide-scale fraud to occur, because now computers, no matter how small they are, I mean, the simplest laptop can store millions of files of taxpayers. So it's been really a concern what to do. So the IRS tried to regulate tax return preparers. Now, you as a taxpayer have the right to do your own tax return. Many people do. Many people do it successfully. They've been doing it forever, and going forward, they probably will continue to do it forever. And I encourage this. I encourage hands-on, getting in there and doing your own thing, self-determination in government. And that's why I'm so torn by this story about what's happening. So that you can do it yourself, or you can hire a tax return preparer that is not licensed or enrolled or certified in any way. They're just people. Most of them are seasonal workers. Most of them work for your franchises like Liberty or H&R Block and many of the other ones, Hewitt Jackson, or any large firm. They're seasonal workers. They know what they're doing. I'm not discrediting them at all. They stay up on the law and they do your tax return. But they're not licensed. And there's no requirement on them to stay up on the law. There's no requirement, and there's no background check. You don't know anything about these people other than when you walk into the office, they're sitting behind a computer. And those are the people that the IRS has been trying to get licensed. Somehow, at least get them regulated. So they came up with a criteria. It kind of fell between CPA lawyer, enrolled agent, and unregistered. They called it the registered tax return preparer. And they said you had to have a PTIN, and you had to have licensing, and you had to have continuing ed. Well, 3 people sued the IRS. It became known as Loving versus IRS. And they sued the IRS, and they won. The IRS lost, and they appealed it again, and they tried to appeal it using the law that created enrolled agent, that horse act I just told you about. And they said that law gives them the ability to regulate all tax return preparers. The first court said, well, let me go ahead and read here. I'm reading from the Progressive Accountant. An appellate court has upheld a lower court ruling that struck down the attempt by the Internal Revenue Service to regulate professional tax return preparers. The ruling means the attempt to impose examinations and educational requirements remains dead under the current law. U.S. Court of Appeals for the District of Columbia unanimously agreed with the district court. Under the current law, the IRS lacks the authority to enact and enforce regulation. The regulatory effort has been dead since January 2013, when in January 13, U.S. District Court Judge James Bosberg issued an injunction halting the program. Now, this is why I'm so torn about this, because I feel that I'm all for small business. I'm all for the cottage industry. I'm all for tax preparers helping and doing, and you doing your own tax return, and you go into whoever you want as a taxpayer. I mean, that's the foundation of this country. Small business is the backbone of our economy. Even though it doesn't seem Washington feels that way, it is. It's the largest employer. It's the largest driving engine of the economy. It's small business. So I'm all for small business. But on the other hand, we need to protect taxpayers. It's not right that just anybody can accumulate a database with your social security number, your date of birth, your address, where you work, the EINs of where you work, how much money you made. These laptops, these computers sitting in these mom and pop tax return offices are gold mines that hackers love to tap into. As an enrolled agent, I have to have security. I have to have, and I'm also, I have a securities licenses. I have a 6 and a 63 FINRA license. So I have to meet certain requirements. My system has to be encrypted. So we spend a lot of money to protect you. And there's a requirement on us as professionals to have insurance, to have continuing ed, to do things that these unregistered preparers do. So it's really, I'm very torn about it. I don't know where I stand on it, other than Congress is going to have to step up to the plate to do something. Anybody that's ever had their identity stolen will tell you it's not a fun thing. The process is long, and getting your credit report cleaned up or getting your tax return, if you're expecting a refund only to find out that somebody else got your refund or somebody else used your social or used your dependents' socials. It's a mess, and it's money you're counting on. So something needs to happen. How overly regulated do we want it to be? I really don't know. I don't know. I don't know which way it's going to go. Typically, the pattern with Congress has been overkill, whereas we just need some simple guidance and some simple basic requirements. We're probably going to have 2,000 pages of legislation about it. I've got some other questions here. I'll talk about, next week, this is a whole topic. I don't want to get into it right now. Sole proprietors as a CPA that I admire says in his website, the IRS loves sole proprietors. You actually get all kinds of tax breaks and all kinds of write-offs that are not available to LLCs and corporations. So, Christy, let's make a note of that. Next week, I want to dedicate the show to sole proprietors. That is mom, pa industries, husband and wife owners. There's special rules, but there's also special tax breaks for you. If you need to get a hold of me, call me. My telephone number is 828-289-9300. You can go to my website, gilberttalkstaxes.com. There's a Contact Us page, and just send me an email that way. My office is at 113 Whitesides Road, right at the end of the road here, right up the street from the radio station. Stop on in. Consultations are always free. If you have a question, feel free to call me. My office number is 828-287-2577. Ask for either Allison, Cassandra, or myself. We'll be more than happy to talk to you. If you've gotten a letter from the IRS, please don't ignore it. If you don't understand what the letter means, or you think but you're not sure what the letter means, have a professional look at it. I'll look at it for free. If you don't want to bring it to me, take it to somebody, because you don't want to guess with this. If they took the time to send you a letter, it's important. I'd like to thank everyone for listening to me this morning. And remember, taxation with representation hasn't been all that great either. Good morning.
This is Dakota Livesay with Chronicle of the Old West Weekly Edition. Coming up this week, we're going to be talking to Roy Young about Johnny Behind the Deuce and Jim McGregor about Wyatt Earp in California. So do tune in to Chronicle of the Old West Weekly Edition.
Join us for Chronicles of the Old West Saturday mornings at 5 a.m., again at 9 a.m., and then Sunday evenings at 8, right here on AM 59 WCAB, Rutherfordton. Today's hits and yesterday's memories, WCAB, Rutherfordton.
Sunday mornings are special here on WCAB. Enjoy programs of encouragement and inspiration each Sunday morning from 7 until 1, right here on Family Friendly Radio, WCAB.
WCAB, Rutherfordton.